Welcome to your daily 5-minute crypto brief with Satoshi and Nova. Today is June 27th, 2025. I am Nova.
I am Satoshi.
Welcome to the deep dive. Today we're jumping into a really interesting moment in crypto. We've got this market recap from June 27th, 2025. And our mission here is to unpack recent crypto moves, figure out where things stand and look at these big regulatory pushes everyone's talking about.
Absolutely, and it's so important, right, to understand these day-to-day shifts, the key trends, basically the forces shaping digital assets. We want to help you cut through all that noise and really grasp what's going on, get to the core stuff without getting lost in, well, everything else.
Okay, so let's start with the market pulse. The recap says things were mostly neutral, total market cap holding around, $3.28, $2.29 trillion.
Yeah.
Feels like a bit of a breather after all the recent ups and downs, like consolidation time.
Exactly. It's a cool down. But what's interesting is within that neutrality, Ethereum ETH actually led the pack, up about 2%. It was retesting that $2,500 level. That's, a hopeful sign for the bulls, hitting a key resistance point.
Okay, ETH up, but Bitcoin. The report says it was in a tight range, near 107KK. So pretty quiet for BTC, but its dominance went up to like 65%.
Yeah, precisely. Muted volatility for Bitcoin itself, but that rising dominance around 65% tells you investors are still kind of flocking to it, maybe as a perceived safer bet. And the sentiment reflects that balance. The fear and greed index, bang on 50, neutral. Plus, the altcoin season index is way down at 20. Clear Bitcoin season signal there.
And XRP lagged behind, down over 3.5%. Interesting mix.
Definitely a mixed bag within that overall flatness. XRP was certainly the laggard that day.
Okay, so beyond the immediate price action, this is where I think it gets really interesting. These bigger shifts potentially pulling crypto into mainstream finance.
Oh, absolutely. This is potentially game-changing stuff. Like the FHFA, that's the Federal Housing Finance Agency. They oversee Fannie Mae, Freddie Mac. They're actually looking into how Bitcoin holdings could count towards getting a mortgage.
Wow, okay. So your Bitcoin could help you buy a house through traditional federal loan programs. That's huge.
It really is. Think about the message that sends. It's legitimizing digital assets in a very, very mainstream way, potentially opening up real estate to a whole new pool of capital. And then there's the U.S. regulation piece. The Senate Banking Committee setting a hard deadline, September 30th, 2025, for comprehensive crypto legislation.
Right, building on that Genius Act for stablecoins. So they're serious about getting rules in place.
Seems like it. The goal is clarity, cutting through that regulatory fog we've had for so long. And that could really pave the way for more big institutions to jump in,
So U.S. moving towards clarity. And then you mentioned Hong Kong. They're really pushing hard too, right?
They are. Hong Kong is actively positioning itself as a global crypto hub. They've got a full licensing system. They've legalized retail trading. It's quite a contrast to some of the, let's say, lingering uncertainties elsewhere. And it is attracting capital. A different approach, definitely.
It does raise questions, though, doesn't it, about centralization versus decentralization and if that model works everywhere. But it's undeniable momentum.
It's a fascinating dynamic to watch, a real-world experiment in how different regions integrate crypto.
Okay, so with that big picture, the regulations, the mainstreaming potential, what's happening under the hood on the tech and investment side?
Well, on the tech side, there was that Solana incident. The foundation had to disable its zk-el-gamal privacy protocol. They found a pretty serious bug could have allowed unlimited token minting, potentially.
Yikes. But no actual exploit happened. Funds were safe.
Correct. No exploit, funds safe. They acted fast. But it did spark a debate, about transparency versus needing quick, maybe centralized decisions to fix critical bugs. It highlights those ongoing tech risks, but also maybe improving response time. It's a balancing act.
Okay. And on the investment side? New ETFs.
Yep. Bitwise filed for a couple new ones, a Bitcoin Dogecoin ETF, interesting combo there, and also an Aptos APT ETF. This just makes it easier for people to get exposure without holding the tokens directly. Builds on the excitement around the spot Bitcoin and Ether ETFs. We even saw Coinbase shares jump, reflecting that general optimism.
And what about derivatives? The recap mentioned options expiry.
Right. June 27th was a big expiry day, especially for Ethereum, something like 936,000 ETH options, worth about $2.3 billion notional value. The put-call ratio for ETH had climbed, suggesting a bit more bearishness, more bets on the price going down. And those max pain points where the most options expire worthless were around $2,200 for ETH and $102,000 for BTC.
So those expiries can sometimes cause a bit of short-term wobble or clear the decks for the next move.
Exactly. They can add volatility, or sometimes once they're out of the way, the market finds a clearer direction. Just something to watch around those states.
So wrapping it all up, it feels like a market that's sort of catching its breath, consolidating. But at the same time, it's digesting some potentially huge news on the regulatory front, plus ongoing tech stuff like Solana and new investment vehicles like ETFs.
That's a great summary. Consolidation on the surface, but lots of significant developments bubbling underneath. Crypto edging closer and closer to the traditional financial world.
It really sets the stage for what comes next.
Which leads to a thought for you to ponder. As cryptocurrencies get closer to this financial mainstream, what unforeseen traditional sectors might they disrupt next? And maybe more importantly, how quickly could this integration reshape our everyday lives?